Ladies and gentlemen, I hate to interrupt. I always love this part because everyone's so pumped up to see each other, and it's going flat out. I always feel reluctant to interrupt at the beginning. It's one of the great pleasures of this event. Every time is just getting to see each other and running into so many people. So very warm welcome. And as usual, I'd like to start with our thanks and to our sponsors with whom we don't exist. Of course, the reason that you don't pay a membership is because the sponsors generously support the club, cover the extra costs. The AV, this beautiful venue here, hard to beat. Great meal. It ended up costing us about $100, which you pay, and we pay the other 100 out of the sponsors' contributions. We run out by the end of the year, start all over again. Done it for 27 years. That's the way we work. So our sponsors are the Stock Network. You see the new banner on the end. TEAS, the big mining firm. Taurus Funds Management. I see Gordon over there. New South Wales Mining. Steve Galilee sends his apology today. Kingsgate, the Thai gold miner. Research as a Service, the Finola Burke's wonderful service. They do an analysis of every one of the people every party that speaks up here gets a free coverage from Finola. Our kingpins, the big guys, been with us doing this a long time, AME Group, and Bear Doll Bear, Sean and John, they always deeply appreciate your support. Ioneer, the Nevada lithium miner. IMARC, biggest show in town, biggest mining event in Australia. Inversia, who I understand handle a lot of the green environmental compliance stuff. CRE, the great in mining insurance company. APM Graphics, Simon right here. And Veritas, the great stockbroking firm. Please put your hands together and thank our sponsors. Now, last month we had our first Leading Edge. Thanks for your support. It was fantastic. We're all a lot of work, find a new venue, and we had to rock along and make it happen. Beautiful old part of Sydney down there, the Hinchcliffe House, but great atmosphere. It went really well. It was really well attended. So there's another one coming up next month. So we're going to be doing 3 of those showcases a year, but wonderful to get that off to a start because we do face a lot of competition from commercial conference companies and PR firms are doing their own, and so it's really sometimes we feel like we do the same thing and don't get paid for it. But it is your club. Everything you do, always support. To support this club means a great deal, makes it more successful, holds our line, and so keep it coming. Now, we have a new friend I'd like to introduce you to. This guy is one of the funniest people I've ever met, and so funny, in fact, that Joel and I drove down to Bowral and met him and befriended him. And I just want to show you, he does a wonderful, I'm struggling to say the word, Albanese. And he does a very good, he did a great Susan Lee, but I want to show you him doing Donald Trump here. If AV guy could just whack that up and make it happen. This is on Insta.
I am meeting with the Australian Prime Minister on Monday. Nice guy, Anthony Balanese or something. I can't pronounce his name, but he's a total disaster for his country. So I'm reading the briefing and I'm thinking to myself, is this a joke? Come on, Australia's got everything, coal, gas, uranium, rare earths, should be the richest country in the world. Think of that. Beautiful country. I love Australians, great people, but this guy, he's selling all their coal and gas to China. Think of that. Well, his own citizens can't afford electricity. I said to my people, is this guy serious? They said, yes, sir. Unbelievable. Then I see that they leased their military port in Darwin to the Chinese Communist Party. Who does that? Even I wouldn't make that deal. And get this, They have uranium, folks, tremendous amounts of uranium, but they won't use nuclear power. I said, wait a minute, they have it, but they banned it. It's like running a bakery, but refusing to eat your own bread. Think of that. So stupid, so stupid. The rare earths thing totally kills me, folks. They have the deposits, lots of deposits, the best deposits, but China does all the processing, then sells it back to them with a huge markup, folks. Now they're coming to me wanting to make a deal, finally. They need us to invest billions so they can start doing what they should have been doing for decades. My treasury guy, Besant, is laughing. I'm a deal maker, folks, and even I am embarrassed for them. That's not a deal. That's a disaster. I'll probably help them anyway because they're allies, but I'm going to say, Anthony, buddy, stop being stupid. And then we'll talk business. Australia could be an absolute powerhouse, folks, believe me. Instead, they're at net zero competitiveness. So sad, so sad.
You'll be meeting Rupert. He'll be coming here. He's amazingly talented. He can drop into a Barack Obama and, any character. He's a voice actor. And you'll be getting a little thing with, he and I started on a new character, which just seems to have captured our imagination. Her name is Jenny Teal. And so Jenny will be appearing. He tells me he's already bought the outfit and the wig. So we'll be putting up some scripts. There's an opportunity for we're going to do a little crowd fund for Rupert too, because he's an actor, and we want to support him, keep his stuff going over the next couple of years on the run up to the election. And I think the teals. What colour is teal when you take away the blue? I mean, now that the Liberal Party's not so strong, maybe they should become the turquoises or something. They've sort of got a bit of a colour issue going on with those guys. Anyway, look, you'll be meeting Rupert. Good to have. Nothing is as powerful as parody in political commentary, as far as I know. In just very succinct pieces like that, can deliver a pretty punchy blow. So Rupert will be coming up. Tom, whereabouts is Tom Lawrence? Tom, you want to just get up and come up here for a sec? You remember Will Jeffries? He's actually up in far north Queensland now, running my last company. This is Tom Lawrence, who is come over here. But now, Tom, it looks like a nice urban sort of guy, doesn't he? But in fact, what were you doing shooting cameras and crocodiles and stuff up in the north? And give us that story.
Yeah, well, I spent 10 years in the Northern Territory chasing wild animals, so crocodiles, buffalo, cattle, that sort of thing for National Geographic and for Discovery Channel.
With a camera.
Yeah. And my hands. And then, now working in the mining sector. Different types of crocodiles. You guys seem to wear suits, but equally as dangerous from what I can see.
Alligator. We've got an alligator here today. Anyway, so anything that you want ever, don't ring me, ring him. Tom, you've got a pack of cards with you here today. So if you want to, if you do want to recommend a speaker, if you do want to tag, it's your club. If you do want to do anything at all, and so please make Tom
reach
Lawrence.
out. Don't hold back. Thank you.
So my favourite commodity today is not uranium or alumina bauxite. It's actually titanium, because 4 weeks ago I had 2 pieces of titanium added to my leg. And I'm absolutely delighted with titanium. I think it's the best metal in the world at the moment. And it does blow me away that somewhere or other somebody mined some titanium in a sand deposit, refined it, and built it into this amazing little piece, and it's now part of my body. It just, like if you ever want a mining story to make you happy, that certainly made me happy over that. So it's pretty incredible that you can be running around after 4 weeks on this great metal. But that's the end of titanium for today. Now, I'm sure every person in this room is entirely disgusted with this capital gains tax. bullshit that they've just sprung on us overnight. In my career, 90% of my earnings have come through the sale of shares of things that I've created and 10% through just fees. The reason that it's worth it to me to go that route, or has been in the past, is that I think paying 25% tax is about right. If you're going to go do the hardships of struggling to put something together, waking up at 3 a.m. sometimes, having the heartache and the problems of enterprise, the least, that's a pathway that I think is reasonable. I mean, obviously, you can do that in New Zealand for no capital gains tax, but hey, somebody got to pay a bit over here. I always think quarter of it. I've seen some hideous big cheques get paid out and on my 25%, but now apparently our lying Prime Minister wants us to pay a half. Now, tell me in this room if that doesn't kill the enterprise that we all want, the enterprise that we need to go out and stake something, to have a go, to invent something, to create something, to create a venture. I think it is absolutely deplorable, and I know that there's a lot of rage in the average Australian about this ambush that happened overnight. And that's just, I've only spoken about the capital gain, not the other issues that have been sprung on us. But I just want to say that to acknowledge among all of us One Nation voters here today, that we're all feeling it, and it's good in a forum like this to together to acknowledge the impact and to say it out loud, because I've heard so many of you saying it to me. It's a fact of life that this has been done. Whether we hope it gets unravelled, and we've still got 2 years and another 2 million migrants between here and the next election. So we've just got to hang in. But certainly, your voices to each other, keep speaking to each other about it, and don't ever think that if you have a one-on-one conversation that the ripples don't go anywhere. They do. Keep it running. Keep the rage running, and I think we can only hope that that all gets unstitched at this wretched moment in Australia's political history. That was a bit of a down note, but had to be said. Now, on an up note, I'd like to, who are we running first? We're doing Alligator. So please welcome to the stage the Alligator story. Lovely, thank you.
Okay, Taylor, thanks. Hello, everyone, and thanks very much to the Sydney Mining Club to inviting us here today. I'm going to talk a bit about uranium and the next uranium mine to be permitted in Australia, but in particular South Australia. We're Alligator Energy, and we have a project in South Australia called the Samphire Uranium Project, which has been in development the last 3 years. We've just had a significant de-risking stage in a successful pilot plant results, and we're on our way to our mining lease application. So on that note, I'll get going. So Alligator's been in existence since 2007 with exploration tenements in the Northern Territory mostly until 2020 when we purchased the Samphire Uranium Project. So Samphire now is definitely our flagship. We have around $13 million in the bank, with another 7 coming through for a sale of our Northern Territory tenements late last year to a company called Devex Resources, and another 3 coming in shortly from R&D tax credits for our pilot plant that I just mentioned that we've been running. So we're well funded over the next little while to undertake the activities that I'm about to tell you about. We also have a greenfields exploration project in the northeast of South Australia, which is analogous to the big uranium deposits of Kazakhstan and Texas. That's what we're targeting up there. But we're focused in South Australia because it's a friendly jurisdiction for uranium exploration and mining. So in terms of the uranium market, we've got a uranium squeeze on right now. So in terms of the demand, we have 415 reactors with another 70 coming online shortly. Now that doesn't count the recent announcements by India where they want to turn nuclear, and some other countries in Europe that are now changing their minds. So the overall driver here has been electrification, decarbonisation, and the advent of the electrification needs with the advent of data centres that are popping up. So in terms of the other commodity cycle, the boom and bust for uranium in the past, we haven't had these fundamentals at play. So we're actually experiencing a shift in the way we live. It's a big structural shift in terms of what we are going through. So in terms of the supply, we're behind at least 10 years, a decade, if not 15. The next supply that's going to come on is coming from Canada, which is the Next Gen project, and that's not coming on for another sort of 5 or so years. There's a deficit right now of about 15 million pounds of supply just to feed the existing nuclear power plants. It doesn't take into account the electrical needs of the data centres and all of those requirements for uranium for those projects. As we look into 2030, 2031, the gap widens again. So it starts to creep up to about a deficit of 50 to 75 million pounds. So that graph on the right there is a graph showing the open requirements for existing nuclear utility fleet. So you can see how incredibly asymptotic it starts to get. So with that in mind, the uranium price also has started to move, particularly over the last 2 years, from around $85 a pound, $70 a pound, through to $94 today. And it's still going northwards of that. The latest offtake contract, the ceiling price was put in at 130. So we're starting to really see a shift in the long-term contracting pricing for uranium that the utilities are willing to buy at. So Alligator, we're positioning ourselves such that we are in production by 2030, 2031, and that's our aim. So just going into the project a little bit more detail, we have our Samphire projects located in South Australia. South Australia has 5 uranium mines already in operation, and 4 of them are in situ recovery mines. Our Blackbush deposit, which we're going to start to develop and fast track, is also going to be an in situ recovery mine, and that'll be the 5th one in South Australia in operation. The project's located near a regional town of Whyalla, so it's not remote. This won't be a FIFO project at all. So that has some very significant financial and economic advantages. And also Whyalla's a steel-making town, so we're really close to services, engineering support and the like. So we're in a great jurisdiction. Blackbush deposit has 18 million pounds already defined, and which we've done over the last 3 years. And that 18 million pounds is enough to start up an in situ recovery project. And in fact, it's quite normal for that type of tonnage or pounds of uranium to support a 12-year mine life, producing 1.2 million pounds per year. ISR projects rarely produce more than 2.5 million pounds a year when things are going well, but 1.2 was a really nice, steady startup project for us here in Whyalla. 5 kilometres away, we have another prospect that was drilled historically, and we're about to release a mineral resource estimate on that, which will add to the 18 million pounds already defined by the team. So recently, said last 3 years drilling, getting that 18 million pounds defined. We also have undertaken a scoping study, and the economics stack up very, very well for this project. We've also undertaken approvals with the state government to conduct a field recovery trial, which meant that we had to go through a mini mining lease application, which is no mean feat for a uranium project, particularly near a regional town where we had people very close to us, and the community had to change their minds about uranium. So we've done a great job in terms of getting that approval, and it sets us up really well for the mining lease approval. In fact, we think it could be fast-tracked to hit that 2030, 2031 production target. So the pilot plant was constructed between August and December this year, put in commissioning, and we're off and running on March 26 this year. So this field recovery trials are the key prudent operational step that all ISR miners need to do before they go to full mining. If you miss this step, then you're problem solving your chemistry set, which is exactly what an in-situ recovery project is, at the time when you're turning on and trying to mine. So that's the key difference here. This field recovery trial is really de-risking our project. We know what to look for, we know where the problems are coming from, so we can build this mine with confidence and produce with confidence. We're also undertaking a bankable feasibility study that's underneath that. The field recovery trial results will start feeding into that now, with an aim to publish that mid-year, with a site to get FID completed by the end of next year. And in between that time, we're going to be drilling and extending the known resource base. So our focus in the next couple of years is really getting that mineral resource estimate north of 30 million pounds, which is really starting to prove up the region as a great uranium asset. These are the broad numbers for the scoping study. It was undertaken at a long-term uranium price of $75 a pound. As I said, we're now around 94, so the metrics improve even further from there. CapEx of these projects are always really low, because it's just pipes and pumps on the surface. It's not hard infrastructure. The steel work's very minor, and it's a modular type of plant. So 130 million for CapEx for the mine at that 75. This study was done 2 or 3 years ago, so now I expect the CapEx to be around 170, 180 million in today's prices. So this is the field recovery trial that will conclude in a couple of weeks' time, but we've undertaken an in-situ recovery process in the field itself. So we've got an extractor there in the middle with injectors around the outside. And ISR works such that you inject some conditioned groundwater that comes from the mining aquifer into the ground, which releases the uranium, and you extract it through the central extractor. So it's essentially a water pumping process where you mobilise the uranium out of the sand that's at depth at around 120 metres depth below surface. That uranium comes out of the ground in the groundwater, and then you put it through a pilot plant, through an ion exchange plant, and the uranium comes out and loads on the resin, and then you strip that resin, dry it, pack it, and it's off to port and export. So it's a very simple, non-complicated process, and I'm glad to say that the field recovery trials hit every single metric that we needed to hit. It hit all the assumptions that we had in our scoping study, if not better. And the key thing for in-situ recovery production is that it's flow, because you need your flow, you need your grade. The flows and the grade here in this project are second to none, very good, and compare with our international peers and Australian peers. Reagent consumption is also a very high OPEX cost for these projects. And again, the consumption of the reagents that we put in the ground were moderate, if not low. And so another great tick in the box for this project to go forward. In terms of going forward and making sure that our plans for a BFS are solid, it's important that we look at the first 2 or 3 years of production, because some people may have seen some of our colleagues in the States with startup projects having trouble restarting projects. And often that's just due to the drilling and the density of drilling on these projects. So we've been focusing on the drilling density from day one and making sure that our ore body hangs together. It's critical before you start putting in production wells. So if your drilling density is higher or wider than where you're putting your production wells in, then you're not leaching and you're in a bit of trouble in terms of recovery. We're focusing on making sure our indicated resources get up to measured before we start planning well fields particularly for the BFS and making sure that's accurate, and a whole lot of technical other issues that we're making sure we have our bases covered. The other key thing is that we do understand in the region there's a good potential for resource extension. So we have a staged approach in terms of mining lease applications to make sure we need to access that resource. We've got it approved and by the government, and we can mine it. This picture shows you the region showing the Blackbush and Plumbush deposit and the paleo channels that are underneath that. Now, the uranium is hosted in sands in what's called buried paleo channels. So they're at about 80 to 100 metres depth. And ground gravity defines those channels very well. So our job now is just to find more uranium. And you can see in this area, we've already had 18 million pounds in the Blackbush area, and 30% of this channel hasn't been only been touched by a drill hole. So 70% is essentially underexplored. Blackbush, there are immediate extensions to the south. Plumbush, immediate extensions to the north and south. And we've just secured access with the landholder to be able to start our drilling campaigns there. And so that'll start in the coming weeks and have significant news flow as we extend those resources over the next couple of months. We think an exploration target range of 14 to 75 million pounds is very reasonable based on what we see from the historical drilling. So in the short term, I think we're going to start to see some great results coming out of this area and start to really increase that resource base, to increase that mine life to an excess of 20 years, not 10 to 12 years. So this is just really summarises our key activities. Our field recovery trial operations are concluding in about 3 weeks' time. We'll have an updated mineral resource estimate released to the market around the Plumbush resource in the near term, in the coming weeks. And then once we've completed all of our drilling, we will release again towards the end of the year, into the new year, the updated mineral resource estimate from all of the drilling. We've got the Samphire bankable feasibility study underway, which will deliver towards mid of next year, and of course ongoing mining lease approvals, which we hope to conclude mid-28, with a view then to getting into construction and operation. I'd like just to quickly touch on the Big Lake project because I think it's the next uranium field in South Australia to be uncovered. We pegged these tenements in the northeast of the state over the Moomba gas fields because there are a lot of analogous to big in situ recovery fields in Kazakhstan and Wyoming and Texas that are analogous or they're coincident with hydrocarbon basins. So we had our inaugural program in August 24, the first mineral explorer to ever pop a hole into this area, and we were specifically targeting uranium in the top 200 metres of the basin, and we hit some really good intersections of sands. Thick sands is what we want to find, and also have uranium in those sands. So we've ticked those 2 boxes there, and we're just now waiting to get back to drill there, and I'm pleased to say we will be there around next week to start to drill the Big Lake project to follow up on this discovery. And we haven't been able to drill there because of the rains in Queensland of late, so I'm glad to say that we can get in there now. So just to wrap up, South Australia is no doubt the Tier 1 jurisdiction for uranium mining and exploration. Great state for investment, and eyes are on the world to South Australia around the investing in uranium. We've got an experienced team. My team has 65 years of embodied experience in in situ recovery. My background is 25 of those, so it just gives you a bit of a feel of how old I actually am. And we've got great upside potential in the region itself in terms of extending the mining life of the Blackbush and the Samphire project. So just watch this space for the next lot of news flow, a lot of catalysts to generate that over the next 6 or so months. Thank you very much, and happy to take any questions. Yeah, thank you. Great, excellent. Thank you.
I've had the privilege of visiting the Beverley Uranium mine some years ago, and it's quite amazing to step out of a vehicle and instead of hearing any motors running, just looking around and white pipes disappearing off into the distance, sort of crickets and birds and no noise, no dust. And the loudest thing I think was slamming the lid on the drums of yellow cake back at the plant. Completely silent operation and amazing. I mean, people, how well it can be managed. You're in an aquifer and all you have to do is draw all of that fluid inward and take it out at the central well. And it's beautifully controlled and a very elegant operation. And Rosemary, over half of the world's uranium is produced with in situ leach. 40%. Okay. So it's a, then you've got things like Olympic Dam and hard rock sources, but it's an extraordinary thing to see if you ever get the chance. Metro Mining, Simon Wensley, doing great things up on the Cape, and which is a very long way from here, very long way from anywhere. But please put your hands together and welcome Simon. Thank you.
Okay, good afternoon, everyone. Thank you for the invitation. I'm going to talk to you about Metro Mining, ASX listing MMI. Firstly, I just want to do an acknowledgement of country. And you can read it there, but this is very, very critical for us up on the Cape. The Cape's not benefited from the same kind of growth that we've seen, around the rest of Australia. It's the relationship we have with our landowners and the local communities is absolutely critical. And you can see 3 dancers there from the local NPA, Northern Peninsula area dance school. It's a Torres Strait Aboriginal community up there. So we work really, really hard to meet all of our requirements of our agreements, but in particular around Indigenous employment. So we have run between 25 and 35% employment at the mine site, and that doesn't happen by accident. There's a strategy in place. We run small planes. We normally hire out of Cairns and run bigger planes out of there to our own airstrip, but we run a fleet of small planes into all of the local communities up and down the Cape. Effectively, what we say is, if you want to work for us, we'll come and pick you up. So that is part of what we do, and obviously the package of roster arrangements and so on. But I just want to make everyone aware about how critical this is to our continuing sanction to operate up on Cape York. Look, the key message here, we are the only pure bauxite producer on the ASX. In fact, I don't think there are any other bauxite producers pure anywhere in the world. I maybe stand to be corrected. There are a few development projects and so on around the place, but if you want exposure to bauxite in operation in today's market, then you need to buy Metro Mining. Okay, well, what is bauxite? No clues in the title of a mineral named after a French village, but it is the only way that you can make aluminium, primary aluminium. So that you put bauxite into the Bayer process, big chemical plant, not unlike a big uranium mill and operation, and that gets converted to alumina. And that alumina, you break the oxygen bonds in a smelter with lots of electricity. Look, traditionally, obviously, construction, food packaging, alufoil is sort of one of the bigger consumption areas. But the real excitement now is in some of these other electrification, so batteries, transportation, so lightweighting of vehicles, etc., machinery. And so with deference to Intel, bauxite is inside pretty much everything that you want to use in daily life, right? So pick up your phone, go out and drive your car, open your door, open your window. There's more. I'd like to challenged the copyright on copper string. It's got more aluminium in copper string than copper, right? So if you want to build an electrical grid, you need aluminium. So lots of stuff going on there, and that's where you're seeing 50 to 60% growth over a 10-year period in those sectors. Look, where are we? Okay, Cape York, I think right at the top, north part of Queensland. I think we're challenging for the most northerly mining operation in Australia. The Gulf of Carpentaria is important to us. We run a transshipping model, so I'll talk a bit more about that in a minute. And our Bauxite Hills mine was started in 2018, an amalgamation of two previous leases that belong to Gulf Alumina and Cape Alumina. So we run about 500 employees. There is no road into this site. The only way to get there is by plane or by boat. So remote is remote. Okay, so what have we done? COVID wasn't very kind to Metro. We had to go into care and maintenance, and what that means, it's mostly care and no maintenance. So coming out of that was particularly challenging. A bit of fundraising in 2021, new management team, and a new board, a couple of new board members. Obviously losing money at that stage, scale wasn't sufficient to be able to make money sustainably, particularly with prices that were coming out of the price for bauxite coming out of COVID. However, we've worked hard over 2021 to this year. We're running at about a 2 million ton run rate when the mine restarted in 21, and the target this year is over 7 million tons. And obviously with that, costs come down a bit, the prices have recovered a bit. It's a cyclical market though, like most, and the challenge here is to bring those costs down even further. This year we were targeting roughly around that sort of low 40 Aussie dollars, and that includes all of the mine site royalties and shipping. A bit of a quiz here. What's got the highest royalty rate in Queensland? No. Bauxite, 10%. So we can thank our neighbours to the south, Rio Tinto. The Comalco Act of 1960s has a 10% royalty on exported bauxite. Okay, so quick run through the team. Very experienced board. A couple, Doug and Andy, here today. So if you want to collar them and shake them warmly by the throat around my REM package or something, you can do that. And lot of big company experience, BHPs, the Rios, etc. Paul, ex-treasurer of Queensland. Similar, I've pulled together a good management team. I want to try and bring a lot of the big company experience, but without the big company lethargy. And we're trying to recruit people who are fed up with that environment and want to do things. Want to get things done, want to do it in the right way, but not hang around in doing it. So it's a really good team that we pulled together. And then in terms of, this is important, I guess, just to sort of talk about, and we're going to talk a little bit about growth in a minute, but what the capabilities, bauxite opportunities there aren't, I'm not a gold miner where I can pick sort of 10 or 20 projects that I might want to buy or expand or joint venture with. I mean, bauxite projects are not common around the place unless you're in West Africa. So we're obviously looking at some growth, and therefore it's important to talk about capability, and certainly remote mining is one of them. Logistics is one of them, and you'll see why a bit more in a minute. And then we've got some really great partnerships with both contractors, as I said, traditional owners, etc., and a very lean, capital efficient operating model, which we need because bauxite does not sell for a very high price. Okay, so the model, look, effectively, when I first looked at this model, even though it was in a bit of trouble and running at a low rate, it all has all the hallmarks of a successful bulk commodity operation. So you've got a good grade ore that doesn't need a lot of processing out of the ground. Double-digit mine life with extension opportunities. The physicals are really excellent. Low strip ratio, no blasting, short haul distances, and we have a very simple flow sheet. And we've got a scalable, it's a very scalable operation. So we have a transshipping model where we take barges out into the Gulf of Carpentaria and we load ships. So I've got a video here which will go for about 2 minutes, and I'll try and talk over the video so you can see. So first of all, we take the topsoil off. We stockpile the topsoil ready for rehabilitation very close to the pits. We try and rehab pretty much in the same cycle that we mine, because that's the most cost-effective way to do it. It also preserves the seeds that are in the topsoil. So you can see there the piles of topsoil ready to go back. We've pioneered these road trains, off-road road trains, 240 tons per load, running on a single prime mover, up to 80 kilometers an hour, very high productivity way of mining. Simple screening method, which we've inserted, so this is much more tolerant to wet weather, which we are at times get a lot of rain up there. And we then move into loading barges across an overland conveyor. You can see the bauxite there, the pisolytic bauxite, little round balls effectively of bauxite which come out of the ground. We've got very good sampling techniques. We've got a neutron scanner. We take physical samples every 3 minutes. There are the barges. We load barges up to 7,000 tons depending on the tide. We've got a fleet of 6 90-meter barges that which are come in and out of the bay, and we've got a fleet of 7 tugs under contract through our contractor TSA, and then we take it 10 miles offshore, and there we've got 2 transshipping devices. This is Ikamba, or saltwater crocodile in Ankamuthi language, 2 high-capacity 35-ton cranes which unload the barge as fast as possible into hoppers, on conveyors, and then to a ship loader into vessels up to 210,000 tons, so Cape-size vessels, so the most liquid market in the freight world. So there you can see we've got a single floating crane there on the right-hand side, and Ikamba, the double crane floating terminal. It's like effectively having a port off 10 miles offshore. So that's in a 25-meter anchorage there where we load the vessels. So being in Capes obviously is critical. Our neighbours to the south, Rio Tinto, only load Panamax size, so 70,000 tons. So whilst they do have obviously an all-weather port which they can use, but it is a key advantage for us to be able to load the biggest vessels. Okay, so where have we come from? 3-year view on share price, and last year was our first sort of real cash generating year, profit generating year. We were even able to reverse the impairment that had gone in 2020 and 2021. And so in terms of and paying down debt as we go, we ended the year pretty much not quite net cash, but 58 million of cash and 59 million of debt at the end of the year before we entered into our wet season. So what's going on in the market? I want to sort of major on this a little bit today. Obviously, aluminium is tearing away. I mean, if I had money today, I'd probably put it into aluminium metal. That entered the year about 2 million tons short, and with the Gulf War, that's become even shorter. So I suspect aluminium is going to crash through 4,000. Obviously, copper's going, and copper, and as I said earlier, copper and aluminium are effectively substitutable in many applications. I'm also going to make a call that China is going to breach its 45 million ton cap. I don't think they'll be able to resist $4,000 aluminium, despite what the government may say. So we'll see what happens there. Now, unfortunately, that alumina market, which is the buffer between bauxite and aluminium, is not quite so healthy. There's an oversupply caused by some high prices that occurred back in the end of 2024, beginning of 25. So a lot of capacities come into the market. A lot of those are, good new refining facilities. They're almost all of them capable of taking Metro's quality of bauxite, but there does need to be a shakeout in that with some of the older refineries, particularly around maybe the inland Shaanxi, Henan provinces in China need to probably close. They are losing money already, and I'm going to describe to you why I think they're probably going to be closed by the end of this year. Okay, so growth in traded bauxite's been huge since 21, so we've almost doubled traded. The bauxite into China has almost doubled in that period. So China's about 80% of the Asia Pacific market for traded bauxite. There's some goes into India and some goes into the Middle East, into Abu Dhabi, but China's the main market. So a lot of the data here is China as a proxy for the Asia Pacific market. There you can see the prices. There's the price spike there at the end of 2024, beginning of 25 for bauxite was pulled up by a very high alumina spike in price. There was a very tight market for alumina at that time, but you can see since then, with alumina prices coming down and then oversupply also coming in from Guinea in that period, you've seen prices drop down. And it bottomed out in January, February this year, around $62 per ton delivered into China. So that was the sort of bottom of the market in January and February this year. And I'm told that I've got a very intelligent audience here, so I'm going to do a bit of, take you all back to your mineral economics days, and we're going to do a bit of cost curve work, because industry structure, I think, is really important for what's going to happen in the future here for bauxite. So here are the cost curves. The light grey line's not coming through very well here, but there is a 2022 line on there. It's less important though, but because the 2025 line, so the cost curve, what we've seen since 22 is Indonesia exit the traded market, and you've seen massive growth out of Guinea. So Australia sits on the left-hand side, and then you've got a pretty flat, but slightly inclined curve there in the sort of medium grey line. So that's the 2022. That's the medium grey line. If you plot 2025 China demand on that, lo and behold, it hits $62. So this thing does actually work. And if you project out the cost curve, this is an independent analysis by CM Group out to 2030, then that intersection between demand and supply comes to about $70. So that's the underlying structure of the industry. But guess what? That doesn't factor. This was all done in January this year, and of course things have changed a lot, right? The Gulf War has changed that, and I'll talk about that. Now, what's Metro doing? Well, look, that's where we were in 2022, and this is where we plan to be this in 2026. So down at the bottom of the cost curve. So there's a lot of protection here. Now this is cost, it's not quality built in, and we do suffer some discounts to this, but our discounts from Guinea roughly about $15, mainly based around the silica levels that are evident in Weipa style bauxite. But what you can see there is the differential between, let's say, 60 and 70, $15 is not a great deal. Now, what happens if we project the outcomes of the current war? So I probably skipped over something. So the Guinea government, the Guinea dominates that curve. About 80% of that curve comes out of West Africa, almost all of it Guinea. The Guinea government a couple of years ago confiscated some leases in Guinea because of bad behavior by the mining fraternity, and one of those was a lease owned by Emirates Global Aluminium, a 12 million ton bauxite mine. They went into a legal process, and that got settled at the end of last year. But instead of re-tendering that mine, the Guinea government decided it wanted to become a mining company. So it set up its own mining company, and it took over that mine. And guess what? They don't make any money. So the prices had come down, and all of the supply coming out of Guinea. So they sort of thought, well, what's going on here? And they said, well, there's oversupply coming out of Guinea. The Chinese dominated miners in Guinea are basically raping and pillaging your resource and sending it across to China for not much money. So they thought, well, look, that doesn't really make any sense. It's been embarrassing to sort of take this mine over and not be making any money, let alone what the taxes and royalties that we're not getting. So they said they were going to put a quota system. They want to become the OPEC of the bauxite market. So they decided they were going to put a quota system in. So they've been deciding what they might do. But unfortunately, what that meant is anyone else who had some bauxite lying on the ground thought that the doors were about to close. So they got it on a ship and they got it over to China. So that forced the price even lower, right? And that's when we hit that 62 number. And you can see this is on the left-hand side there, you've got weekly ship arrivals at all the ports in Guinea. And you can see once the government made the announcement, the ship arrivals increased. And so you've got excess supply coming out of Guinea, which forced the price even lower. But then the Gulf War started at the end of February. And so I guess ships kept arriving in March because they were booked in February. But as soon as those ships had stopped, you've seen a massive reduction in ship arrivals. Now, why is that happening? Well, the freight price from Guinea, which was about $25 a ton, $27 a ton through the average of last year, has gone to $45 per ton delivered on a pricing basis. So you've got more than 15, almost $20 a ton of increased price, but of increased cost. Now, normally, that it's about a 2-month sail from Guinea, and that's why there's a lot of oil, but also some freight costs in there. And so the equivalent from Australia, which is about a 10, 11-day sail in Capes, so our Capes with our loading rates is more like $6 a ton. So, even without that, Australia shows the advantage of proximity here in terms of costs to deliver into China. Now, just to note, we actually have fixed all or 80% of our freight at the beginning of last year for this year and next year. So we're not susceptible to most of those rises. So we fixed our prices at $10 a ton. It was sort of it's difficult enough to explain bauxite markets to people, let alone freight markets as well. So we decided to sort of take that out of the conversation. So there's something going to happen here, right? Price has only gone up by about $5 or $6 a ton in Guinea, and that's because the alumina price is still low and there's a bit of stock on the ground. But the costs from Guinea have gone up by $15 to $20, and they were already at the bottom. They were already at the junction of supply and demand, and so the suppliers at that juncture were not making any money. So those who were not making any money before are now making $15 to $20 losses, right? Maybe $10 to $15 if you think the price has gone up. So, and that's why the ship arrivals have dropped in Guinea down to about 40% of what they were 8 weeks ago. So, look, I don't know exactly how long the stock on the ground that was a result of those shipments earlier in the year will last. Obviously, there's some stock on the water still coming over, but certainly within the next few months, we're going to see something happen here. Okay, exploration. Look, we've got 10 years of reserves so far up around the Bauxite Hills mine. We've also got an additional 50 million tons of resource. So we're looking at converting that into reserve, most likely requiring some screening work. The old Cape Alumina Picelite Hills project is still there, about the same amount of resources there, about 50 million tons of resource there as well. So we're dusting off that feasibility study to see whether we can get some additional production out of a satellite operation. And then we've got a whole bunch of exploration up and down the Cape as well, which we're going to be working on. Like I said, screening silica is bad for the Bayer process. It requires caustic soda to remove it. That's probably from a weeper bauxite point of view, that is the weakest element. We've been trialing dry and wet screening. Obviously, dry screening really can only happen about 6 months of the year due to our wet weather. And wet screening has been proven in a bulk way by Rio over the last 60 years. So we're looking at all of those things to try to increase the length of our resource life. Capital allocation, quite a few words on this slide, but the key ones are share consolidation happened about a month ago. We also have a share buyback program, which we have committed to and will execute over the next 12 months. And in terms of absent any other use, we of course then intend to pay back in dividends, which if things go well this year, we may be in a position to do at the end of this year. So if we can hit our targets and our costs and the market goes the way I think it's going to go, then I think we may be in a decent position. Let's talk about growth a bit more. Obviously, if we can grow in bauxite, we would. There aren't that many bauxite projects, as I said, in the jurisdictions that we really like Australia. I don't think, Metro's DNA is really suited to us going into West Africa at this point, or to Brazil, where there are projects. And honestly, I mean, I think the cost curve that I just showed you doesn't really, give me any confidence that any project we invest in there would have high returns in the long run. So obviously, depending on what the Guinea government do. That means we can deploy those core competencies that I talked about earlier, maybe in some other areas. This transshipping technique, it's a bit more common in obviously Indonesia and Africa, but not very much used in Australia. It is a way of accessing mineral resources in remote areas. There's plenty of minerals around Australia that are not close to railways and not close to ports, not close to roads. And so we think that is going to be an interesting opportunity for us to deploy the skills that we've got there. And of course, with the cash that we're about to generate, that also gives us an ability to get involved in projects that might be good projects, but are struggling to get the financing that they need at this present time. Okay, there's some stuff on the website here, obviously, in the presentation about ESG. I mean, talked already about how important this community and regional impact is for us up in the Cape. I mean, there really are very few job opportunities up there, and one of our most important factors is being about having a very, very practical, I guess, approach to closing the gap. There's also some data there. We're spending a lot more in community. We collect all of our seeds from community seed pickers. We do a lot with that program. There's some fantastic work that also we're doing up in the schools around leadership with the Jonathan Thurston Academy, which we sponsor up in the Northern Peninsula area. So some really, really, really good work that's going on there. Okay, so key takeaways. Upstream exposure to this aluminium value chain. I think that cost curve demonstrates where some of that rent is going to accrue. So if you want to grab a piece of that, the only play at the moment is with Metro Mining. Long life, high quality, or with expansion options. Simple, low cost and scalable business model. Industry structure is getting more attractive, and it's working in our favor. That cost curve is steepening, and it's as it goes out, and we are moving in the other direction. If Guinea does become the OPEC of the oil of the bauxite market, then we should see even higher prices than that cost curve would suggest. So Metro is a net beneficiary of the oil price. Of course, our mine costs are going to go up. It's only a few dollars a ton, though. We have locked our freight in to a large extent, and so if you want to play oil price, then Metro is another way you can do that. Low cost plus margins at scale. It's all about margin, and we can deliver that now at the 7 million tonne rate. And we're looking to build a pragmatic growth pipeline. Thank you very much.
Rosemary, would you like to come up and join us for some questions? Simon, I have to, on the royalty front, Queensland Coal, since the Palaszczuk government, is 20% at 200, 30% at 300 and 40% at $400. Are you aware of that?
Yeah, but what's the price now?
Sorry?
What's the price now?
Oh, yeah, but I mean, that's not... Okay, all right, you know what you're talking about. Okay, any questions? What a couple of great stories, eh? And it just shows you how much diversity we have across the mining industry. We've got a Australian mining sector. We've got a question down the back here. Keen to go?
Thank you. Both great presentations and companies that I am actually familiar with, but actually have a question for Simon. I've covered Cape Alumina and Gulf Alumina in the past, and one of the issues for Cape Alumina was the change of environmental legislation, which segmented and reduced the Pisolite Hills area. I know it was featured as one of the expansion areas. I'm just wondering, in the hierarchy of your expansions going forward, whether that would be first, second or third, and whether that environmental legislation is still impinging upon you. It was certainly a problem at the time, but just like to get an update. Thank you.
Yeah, good question. Yeah, no problem. Well, the initial issue there was the Wild Rivers, and that got repealed. But the main issue as to why Cape Alumina didn't develop that mine was because of a national park, effectively, that sterilised about half of the resource. So the Steve Irwin station was converted into a national park. So that's why there's only about 50 million tonnes of resource there left. So it doesn't stand up as a standalone operation. But now that we've got scale at Skardon River, as a satellite operation, it potentially stands up. So we're effectively running it out of Skardon River at maybe a 1 to 2 million tonne per annum type rate. So look, it's definitely second or third cab off the rank, not primary. We're going to look at the resources around Skardon River first. That's where we're already operating. So that makes more sense. But it definitely has an opportunity in maybe a few years' time to become a sort of supplemental sort of satellite operation.
Yeah, Keith. So it sounds like you've got some dividends on the horizon there.
I've got my usual three of Alligator. Assuming it's in situ resin, I suppose, what depth are you going to? Is it in an old river area with risk of salt?
So question for who, Keith?
Pardon? Alligator.
Okay.
So what depth, assuming it's in situ resin, what depth are you going to? Is it in an old river area with the risk of salt? And do you expect 4 sucking wells to be enough, since most other people seem to use 8?
Okay.
Of Metro, when do you expect to declare and pay your dividend?
That's probably an easy question. Okay. All right. So the depth of in situ recovery for the full project will be between 80 and 120 metres. So that's where we'll be extracting the uranium from. The uranium in the groundwater then goes into the resin ion exchange in the plant. Your next question, sorry, there's a bit 4 of them. The pattern, okay. So this was just a trial pattern. So normally, and patterns in situ recovery can change from one extractor with the norm is about 5 injectors around the outside. That's a standard. But depending on the size of the ore body you're trying to leach, the number of injectors will change. You can even have line drives. So that's all sort of normal ISR practice. So we had our wells here in the trial at 10 metres. That's so that we could get results quickly, and we're not waiting 12 months for the recovery profile to come out. So that was a operational and an economic decision to make sure we get the parameters we need to get moving quickly. And we've learnt from our peers in terms of their trials in the past. They've put their wells 35 metres apart and they're still waiting 18 months later to get the same results that we have in 2 months or 3 months. So the aquifer is hypersaline, and this project is more saline than the others in South Australia, but we trialled a desalination prior to actually the extraction of uranium. That was a novel process that we tried, which is why we've done the trial. And that was very successful, and that's evident from the fact that in our ion exchange plant, we delivered 98% efficiency of extraction of the uranium from the groundwater. So, and that's standard too. So that approach worked really well. And when we do that approach at scale, it becomes even more efficient. So we're not worried about the salinity. And in fact, I think we've proven an approach to these projects that have very hypersaline water that they can still be extracted. It doesn't stop the uranium coming out of the ground liberally. It's just the process. So we will manage to knock that away.
Yeah, dividend later on when you feel like it.
Better be careful what I say with my chairman in the audience. But look, we've got a clear dividend policy out there, 20% of after-tax net cash flow. Look, we are a seasonal business. We do have, obviously, Q1 is our wet season, so our revenues and our profitability. So we have to watch that and make sure we've got enough funds to get through there. But effectively, this becomes a cash cow operation, and so we would be expecting under normal, if we can deliver on the tonnage that we talked about there, 7 million tons plus, we should be generating, good solid cash flow, as we move forward. So I won't sort of be definitive, but I think that's enough guideline for now.
Yes, Julie.
Yeah, hang on, just on that point. What happens when a cyclone hits? I mean, do the pits get swamped and got big lizards running around all over the place?
Yeah, we have a good cyclone management plan. All of our marine assets come into the river or into Port Musgrave. So all of the assets have what we call cyclone moorings. They are load tested to cyclonic strength to hold the assets. All of the equipment gets tied down. We have safe, like sort of bunker rooms, buildings that are cyclone. Can withstand cyclone strength winds. So we had a dry run of that this year. Cyclone Narelle came pretty close. So we didn't get hit too badly on the mine site, but we got a bit of rain. But the good thing about this area is, it rains anyway, right? So we got 4 meters of rain this year, and in a 3-month period. So it does drain away pretty quickly.
Of course, the laterite is a product of drainage. Yeah.
Thank you for taking my question. So my first about the metro mining. From your presentation, you look at the Guinea contract price, a lot higher than Australia contract price. But Australia also have an advantage about a low freight. So can you tell me what the reason is? That because the quality of bauxite? And my second question is about you look at the aluminum price is almost current historical high, but the bauxite price is very low. So there's a divergence. Can you give us a bit of reason why that's the case? And the last about a dividend, because Australia gonna have the new capital gain tax. So you did such a good job. You are cash. You made a profit. So in the future, when you consider, because that new tax law, would you for investor probably more tax effective? Will you receive a dividend instead of capital gain? Thank you.
Yeah, the difference between the Guinea benchmark and the Australian benchmark. The Australian benchmark is Rio Tinto's primary product, so it's a bit higher quality than ours. But the main difference is the silica level. So in Guinea, the silica is about 3% of silica, and that's not all silica is the same silica. So we have about 11 to 12% silica in our bauxite. So the difference is effectively the cost to remove that, and so that's where that differential comes from. But the silica can occur in two different minerals. One is kaolinite, and the other is quartz. Kaolinite dissolves at low temperature, about 150 degrees, and quartz at around 230 degrees. So there are ways of controlling the quartz dissolution rate in the Weipa style bauxite, but it takes quite fine control of temperature and residence time and the grinding of it. So yeah, but look, so long-winded answer is yes, it is the quality. It's nothing to do with freight or anything else. Like I said earlier, I mean, aluminium, it's all supply and demand, right? Effectively, aluminium demand is still going gangbusters through all of those applications we just talked about, and it's a substitute for copper. So the more copper price goes up, the more substitution comes from aluminium. So there's definitely a strong growth, 3% plus growth profile for aluminium. And as I said, aluminium markets were short coming into this year, and they're going to be even shorter now because of the Gulf War. On the reverse side, alumina was oversupplied coming into this year, and bauxite was also oversupplied. So you're seeing effectively a different supply-demand dynamic in both of those. But as I hope I outlined, I think there's going to be a correction in that. You're already seeing a correction in the bauxite supply dynamic out of West Africa. And that will likely, as those bauxite prices go up, it will also force a restructuring in the alumina business. So those alumina refineries that are forced to take higher priced bauxite may not be able to make money at the current alumina price, and therefore I expect to see alumina refining swing out, particularly in inland China. So I expect to see that as a result of the bauxite prices that have to go up. I expect to see a reordering there. In terms of look, we're not paying any tax at the moment. We don't pay any tax until 2028 due to the tax losses that we've incurred. So at the moment, any dividends we pay would not be franked, but that may be the case. And I won't really comment on the capital gains tax at this point. So
it won't be there by 2028, will it? It'll be unwound again, hopefully. How are we looking? Anybody else for there's one down there, Gordon Gold. Yeah.
Well, it wouldn't be appropriate if I didn't discuss your tongue-in-cheek discussion about coal quality.
All right, here we go, Gordon. Grab the mic, mate.
So, as the chairman of QMetco, a private company that produces PCI coal in Queensland, our percentage of royalties of gross revenue since 2022 have read 18%, 20%, 16%, 13%, 13%. I don't see any of those numbers less than 10. And not only that, if you get another $10, you pay 1. If I get another $10, I pay 4. Thank you.
Yeah, no, it's pretty criminal, the Queen. And it was just the fact way it was just dropped out of nowhere back then. I think Cameron Dick was the well-named and treasurer of Queensland at the time, came out of nowhere. And unfortunately, the new Premier said he wouldn't review it until the end of this period because he has to pay for the Olympic Games. I think that's mostly it. Okay, look, we're good. I think anyone else? Thank you, Gordon. That wasn't a question, but a good comment. Yeah, okay. Present time. This is something that we. I'll hand them out, mate. Come on. You too. Firstly, thank you very much. It's a great audience and a very, very interested audience. This is a gift that we actually specially have made. It is the Eureka flag, and we always take the opportunity to wave it. Yeah, thank you. And the reason that we give it is that it is the miners' flag. It has been wrongly conflated with the rebel flag in the United States, which is regarded as a redneck flag. We have had rednecks appropriated, being the CFMEU, but it is actually a flag that's been very important in the history of Australia. In the Ballarat field, it was 20 miners were killed by their own government over a taxing issue. I think you got problems today. So it and that went on to 13 of those miners were tried for treason. The jury let them all go, and 4 of them went on to Parliament and became instrumental in the writing of our Constitution. So it is the miners' flag. When I hang it outside my house, so that I don't get people calling me a redneck, I always put a sign out underneath saying this is the miners' flag. And if you do hang it on your operations, which I hope you do, it's worth putting the story down there about the history of Eureka. It's something we can all be proud of as miners, that we contributed to the formation of our nation, and as we continue to. So it's a bit of sentiment goes behind this flag, beautifully made in the latest this stuff, cyclone proof, by the way. It's a very, very long wearing. You can leave it out there. I think you have to put a light on it if you leave it up there at night. There's a protocol, but that is apparently the long-lasting. And they're sewn; they're not printed. So these are the best possible flags you can get. And for 2 fantastic presentations on behalf, these are the members here. I just work here. On their behalf, I just want to say thank you very much for your efforts. Please put your hands together. Okay, we'll see you back next time for the leading edge down the road, and another every 2 months back here in the big house for lunch. Thanks very much.